Hi everyone, today let's talk about the biggest market crash since 2022. Then of course we'll take a look at all the usual data and charts. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So the Dow tumbled 1,000 points, the S&P's had its worst day since 2022, but let's take a look at the updates. They say the Dow was down 2.6, NASDAQ lost 3.4, I think it finished right around 3 on the day, S&P's were right around 3 as well. Well below those markers that we've been talking about. 5,200, 5,250 was interesting, and the NASDAQ broke all of those levels. You can see it here on the charts. This is just today's price action, up around 39,000 at its peaks for the Dow, dipping all the way down to 38,000. Got a slight bounce here into the after hours. That's interesting. But let's look at some of the triggers here. We got Japan falling a lot here. The Nikkei lost 12.4%, its worst day since Black Monday in 1987. Treasury yields are tumbling, falling below 3.78, and Bitcoin falling as well. Markets are pricing in that recession after the unemployment data that we got on Friday, and I do think that Japan sell-off was a big trigger for that continuation lower that we got here today after the move on Friday, which was also quite bearish, just not as aggressive. And then we also have oil hitting some 3-month lows, cratering, again another indicator that markets are pricing in that recession after the unemployment data that we got on Friday. Moving over to Fear and Greed Index, we jumped all the way down to a 19. Historically, this is a pretty good time to be in markets. Time to be buying around that level. 19, you can see we didn't even get that low on these previous numbers. 20 was the low. That was as low as we got. We did hover there for a while. Remember, we talked about it about a month in that price area before we saw the rally up, and we are now here again, so we'll see how it plays. Crack that 125 EMA. We talked about touching it. I thought we would get there. I didn't think it would be in this manner. And then looking at strength, still hovering in greed. This is the NYSE, kind of weird there. Breadth cratering, put call ratio going higher. In extreme fear, that got all the way up to a 0.86. Volatility spiking massive. That's a 38.5 there on the VIX. That is a historical level. We'll take a look at it later on the charts. And then you can see bonds cratering. So safe haven demand jumping down to an 8.5, negative 8.5. Haven't seen that in a very long time. People getting into those bonds, trying to lock in yields as we get closer to potentially recession, but definitely cuts. And then you can see junk bond demand also jumping down into that extreme fear. This has been very, very resilient, but it is finally moving here today. Moving over to earnings, we did get some of that REIT earnings. You can see Realty Income missing on the bottom line. You don't see that too often. Did beat on the top line. Hopefully that's just CapEx spend or something like that. And then you got Simon Property beating on both, so that's good. Tomorrow you got Amgen, Caterpillar, Uber, Duke Energy. Really curious about how Caterpillar is doing. Marathon Petroleum, always interesting. Super Micro, that's going to be a good one tomorrow. And then Wynn Resorts, see how that consumer is doing. And then for Wednesday, you still have Walt Disney. Occidental Petroleum, also interesting. And that'll wrap it up for the Wednesday earnings. Moving over to the economic calendar, we did get some economic data. Global services PMI, not bad. Composite PMI, also not bad. Non-manufacturing PMI in line. Non-manufacturing prices basically in line. So the economic data outside of the unemployment rate is still hanging in there pretty decently. And then tomorrow, basically nothing. 3-year note auction. And then for Wednesday, also nothing. Just 10-year note auction. So pretty light on the data for this week. Moving over to Max Pain, we're all the way down at 522. Max Pain's at 542. So this is almost a moot point at this point. Bottom of the calls, you could maybe say 527. These are all coming in here. This was not here over the weekend, but 527 gives you about a 1% up move. Put call ratio, super, super low. I guess that makes a little bit more sense why markets are cratering there. 0.96, and then total options, 580,000, nothing crazy. So maybe a 1% up move, but who knows at this point. Markets are doing what they're going to do. I don't think Max Pain's going to have a big effect this week. Moving over to the charts, let's take a look at it. Obviously, it's a dumpster fire, but what does it look like underneath the hood here? So you can see the big gap down, big fall pre-market, 3 get out bars. Then you can see a full reversal here of those get out bars. And then you hold a higher low here and then a rally into the close. Interesting. So definitely doesn't look as bad as you would expect. on the intraday pricing, at least in my opinion. And look at these levels that we're back to here. You can see we're back to the levels from May of 24, filled some of these gaps here that were left. Back to that 3 May candle, filled that gap. You could argue there's still one more down to 505 going back to the previous day on 2 May. So maybe we're going to go back down and fill that. That would be another $15 lower or another 3% potentially into that zone. You'll also have the 200 sitting there at 499.88 at this point. So that's within striking range based on these kind of moves. But look at the volume, big volume. Got the clear bottom early in the session. 7 o'clock candle was the bottom. 8 o'clock candle was a push higher. Pretty much rallied all day here. Pretty interesting. We've broken this high from the beginning of April. And look how much we're up after hours. Pretty substantial. We closed right around 517.50 and we're all the way up at 521 hitting this 21 EMA. And it looks like we might push through that after hours here. So maybe we actually go back and fill this gap up to 530. That would be interesting. I don't think this down move is done by any means, but in the short term, it seems to be finding a little bit of legs. And then moving over to the Tasty charts here just quickly, you can see the ATR stops didn't move, which is interesting. 536.47, still sitting in that same zone. You can see 4 down candles in a row on the 4-hour chart. Big wick low rallying here. 522 after hours, 8 EMA sitting at 525.80. Momentum stepping up, volume coming in here. Maybe this is a short-term bottom. I mean, it's super aggressive. Definitely some capitulation and very low levels on fear and greed. So it's not impossible, but I would expect it to still be met with sellers at some point. Moving over to the NASDAQ, very similar thesis. Huge move down, over 6% at the bottom of the move. Hit 421.08 after closing the day up around 448 on Friday. So shedding $27 and then big rally early in the session, huge rally to the 21, pulled back, hit the 9 EMA and then rallied into the close. And it seems like all of these structures are continuing to be bullish. This looks like a clear bull flag, rally up, bull flag here, rally up. Seems like we're going to catch a little bit more bounce. You can see after hours we're at 440.80, which is about $5.50 higher than where we've closed on the day. So massive move after hours, even with the huge leg down that we saw. So maybe we'll fill the gap, look for a price target of that around 448, fill the gap there. And then we see a bigger downturn, hard to say. Or maybe this is a short-term bottom and we're going to get a gap down, gap up for the Tuesday open, something to consider there. And then talking about levels, 441.81 would be your resistance. You can see this consolidation here going back to March all the way through April. Dip low here. Let's go ahead and extend out that trend line. Not one that I thought we would be seeing here anytime soon, but sure enough, we touched that trend line, touched the level, got a bounce from there. Makes sense why we're seeing huge volume at that zone and a rally from there. From top to bottom, you can see that's about 15.5%. So that's definitely a big discount from our most recent highs. I would argue this most recent high was overpriced, especially based on the conditions. But that doesn't mean we can't see a short-term bounce, which is what I was actually calling for going into the Monday. It seems like we're going to catch that here on Tuesday. How much rally is there in it? 144 EMA sitting there at 447.52, which would also give you the gap fill. I think that's what we're looking for, at least in the short term. Moving over to the Tasty charts, you can see very similar setup to the SPY. Hit that level, saw the sell here, gap down, super extended, well below those lowest levels. Got above it here on the 7 o'clock candle, hit the 8 EMA at 440.82, pulled back a little bit, and we're right back to it there after hours, 441. And similar to the SPY, you can see ATR resistance didn't move at all. 453.65 is that level right in here. So we'll see how it plays. Probably going to push up a little bit more, fill the gap tomorrow. Moving over to the Russell and the Dow here, you can see the Russell hit that 200 SMA all the way at 197.24 and then bounced right back into the middle of the range. The level there is 201.88. Again, after hours, $2 higher. Looks like we're going to fill the gap. Just a massive move lower, way lower than I think anyone would have expected off of that move on Friday. But now we're rallying again. We'll see if we can keep it up into tomorrow's session. And then similarly here on the Dow, not as bad. 200 sitting there at 379.77. Looking for a move up to that 144 EMA. It's almost there, 389.48. We're at 389.14. But again, if we hold those gains, we're back above the level here. looking for that 392.44 would be your next price target after the 144 EMA. Moving over to the Mag 7, down 3.77%, obviously much lower than that before we got that big rally. From top to bottom here, that's about 20% lower, so definitely a strong pullback, not quite oversold. 32.59 was the level on RSI, definitely hit oversold conditions at one point, hitting these levels back here from the beginning of May. Then we rallied through the highly traded zone, through the 144 here after hours, and then 249.41 is the level, sitting right here at this trend in these previous lows. Again, if we did get the gap fill, that would put you at the low from Friday, which is 252.53, which is about another $5 higher, which seems touchable at this point with how strong that after hours rally is. Moving over to Apple and Microsoft. Apple down 4.8, Microsoft 3.27. Apple gapped through all these levels that we talked about, got all the way down to this zone here at 197, bounced from that area up to the 55 EMA. Momentum still bearish, volume still holding in there over the last 2 days. RSI all the way down to 38. Again, after hours, we're up another $2. Seems like this is going to get a little bit more rally, test these levels, and then we'll see. Of course, the trend here in the short term is still bearish, but that doesn't mean we can't fill these gaps and then see more down move. And then looking at Microsoft here, gap down and fell, broke the level here, 394, got to these lows, probably should have had a level there. But these lows from back here at the end of April, that's 389.49. Touched that level, bounced a little bit, just barely. And then again, after hours, more than $5 higher, 200 sitting there at 404. And it wouldn't shock me to get a gap fill up to 408. Moving over to Tesla and NVDA. Tesla down 4.2, NVIDIA down 6.36. So way over through that 95 level. Almost touched my next one at 90.63. Low of day was 90.69, so just missed it by 6 cents there. Could arguably say that's a touch here at these previous highs. Touched that. And then we got a bounce, almost filled the gap, just short of it. So the gap fill here, the low of Friday was 101.37 and the high of day today was 145. So just barely missed that here, but it did touch those levels. And the question is, will we see more down move? Next level, right now, 95.74 is your support, but if those start to break, 90.63 and then 84 there. And then similarly here with Tesla, 203.80 is your level as long as we hold this 204 after hours price. Moving over to staples and discretionaries. Staples fell, but not as bad, 1.97. Discretionaries 2.83. 77.50 touched that level, got a little bit of a bounce on staples. Still hanging in there, still think we're going to get to 79.90. The more concerning piece here is that this was an everything sale, so those are typically the worst kinds of sales. This is not rotation. Question is, will this after hours pricing hold? Again, it still looks okay. Next level here on discretionary is 174.76, bounced from 171.18 up to 173.10 after hours. Volume coming in, momentum still bearish here, so structurally still does not look great at all, but we did get a huge swing on the price today. And another thing worth noting here is that you can see staples just barely gapping before falling, versus everything else, which gapped down a lot and then rallied back up to those prices. You can see resistance here on discretionaries around that 23-24 April time period. Moving over to Breadth. Breadth did fall a lot, but honestly not as much as I would have expected. So at this point, I would expect Breadth to start to push a little bit further. 16, I think, is in the cards at this point. We're not oversold yet. 33.54 on 20-day Breadth. You can see this previous move down in May. Just barely missed oversold at 30.12. I think we got a little bit more selling in the tank. We do have 3 bars in a row, which is a little bit concerning. But you can see these previous moves where you get really deep cuts, really oversold conditions after being basically at the same point we were at here. So that's the beginning of April, big deep move. And then you got to that same level mid-July. I would expect a deep move here. Don't think this is going to be a shallower move like this. Question is how aggressive. Based on everything we've seen, it's going to be pretty aggressive. And then looking at 50-day, again, big fall, 21%. 40 is the next level. But if this is going to be as deep as that 16 level on 20-day Breadth, that would bring you back down to this 26 level on 50-day Breadth. And you can see here, the April price action was actually a higher high versus this most recent peak here in 50-day Breadth was a lower high. And then you can see we dipped a little bit, again, another lower high, and now we're breaking down here from these previous highs. So I think this is going to be deeper, 40 at least, if not down to 32 or even that 26 area. Moving over to the dollar, look how correlated these are. This is pretty interesting. So you got a big move down, didn't gap, but it did fall. big wick to the low, recouped some of that, and then we gapped here, and now we're rallying a little bit. Looks very similar to those other charts with the falling price action, rallied throughout the session. And when the dollar is correlated with markets, that's when we're starting to price in economic conditions. So markets concerned about recession. If we maintain the dollar, that means we're not going to get recession. And we've been talking about the dollar as an inverse because that is the more normalized condition. And the dollar has been extremely weak with yields going lower, but now it seems more likely that bad news is bad news once again, and bad news takes the dollar lower as well as equities. It's also worth noting here we did touch that trend line that we drew out here going back to this previous move. Talked about that zone on Friday. Weren't that close to it on Friday or the weekend video, but now we touched it. Now we're getting a little bit of a bounce. If this starts to rally here, that could give equities a little bit of strength. Moving over to yields, 2-year getting all the way down to 3.6. Pretty crazy there. And the low of day here today on the 10-year was 366.7, with the low today on the 2-year being 365.6. So the low on the 2-year was actually lower than the 10-year here today. So again, we're almost in those normalized conditions. You can see we're almost there. We're back to inverted right now, but the lows on these markets were different. Who knows if they happened at exactly the same time, but that would have given you a normalized condition, at least for a second. Still super oversold, momentum still bearish here, but very close to normalized conditions. Re-steepening of that yield curve, which means you have a pretty short amount of time historically before you start to see that recession roll in. Moving over to bonds, you can see J&K falling. Nothing crazy, honestly. 93.67, touched the level. Same zone we've been in a lot of times. Momentum bearish, RSI bearish, but we did bounce a little bit, so we'll see how it plays. We're back into the middle of this range, the same range that we've been in for a long time. We are hitting this trend maybe as some resistance. We'll see how that plays tomorrow. And then looking at TLT, as you would expect, gapped and then fell, the inverse of markets here today. And now we're at this trend line. Let's go ahead and extend that out just a little bit. Right there, we're right at the trend line. Huge volume coming in. Makes sense that this might fall just a little bit. It was really extended, but I still think we're going to touch that 100 price target here pretty soon. Moving over to volatility, look at these moves. Huge moves. Move index, we're back to the highs here from mid-April. Looks like this is probably going to go higher. Let's extend out some of these trend lines, see where we're probably headed. Up to that 31 area, seems like volatility is going to continue higher here. And then look at the VIX. So the VIX high today, let's go full screen on that. That was 65.73, not something you see on the VIX super often. I'm sure if we extended out all of these trend lines, we definitely would have hit all of them. But look at these levels. These are levels we haven't seen since back here in the pandemic. The lows in March of 20 is when we were seeing those levels. Let's zoom in on that just a little bit here. Huge spikes, rallied all the way up and peaked around 80, and 80 was the bottom. And then we saw some rallies here. But even with this move, it took a lot of days to get there. Pretty consistent stacking of days. Not the same thing as what we got here today, where we just had really 3 stacks, huge wick, big rejection. It'll be interesting to see what happens here. We were looking at the prices here from mid-March as a target around 29. That's the zone that we wicked on Friday. I thought we would hold that level and push a little bit more, but this is way higher than I would have thought. You can see we're holding levels, the same levels that we saw here February of 22, March, May of 22, same ones here in October of 22, holding all of those levels right now. So again, that indicates that there's probably a little bit more upside on the VIX and downside on markets, but the question is what happens first? Does it pull back a little bit and then go up to those higher levels, or is this the top? 65 on the VIX is definitely a high level. Moving over to my accounts, I got taken to the cleaners along with everyone else, unfortunately. Still positive on the year, but just barely at 5,000. If I had held my positions, I'd probably be in an okay spot right now, but I just did not think we were going to see such an aggressive move to the upside the way that we did. And this after hours price action is crazy. You can see up around 442, 442.50 on the mid-range on that after hours price action, so another % higher after hours. Should profit a little bit from that. The rally was aggressive. I held my shares here on the IWM, rolled that out to 2 days from now for a 201 for $4. So that's 205 as max profit there. And we're already there after hours. So we'll see how that plays. Still being cautious on the Russell. And then the Qs here. I rolled my puts down, so I have 2 puts now at $435. Those are in profit for $5 credit, so there's another $700 potential there. And then I did sell a 2-day from now for $448, and we are almost there at $442, so just 1.5% off of that from 2 days from now for $2 credit. If this continues to rally, I might put some shares back on tomorrow. That doesn't sound smart, but this rally has been crazy, and you have to play the markets that you have. So overall, marginally bullish even after the crazy day that we had today. Let me know down in the comment section what you think of markets here today. Can we continue up a little bit and fill those gaps? Or will the sellers come in and push this right back to the lows of today in the next couple of days? Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.